Welcome to Home Care Matters, the show where we discuss all things home care, with discussions on important age-related matters and topics. Brought to you by Enriched Life Home Care Services, the #1 rated home care provider in Michigan by Top Rated Local.
Hello, and welcome back to All Home Care Matters. If this is your first time visiting us here at the show, we want to thank you for taking time out to be with us today. We appreciate and understand how valuable everyone's time is, and that's why we try to make each episode here at All Home Care Matters something that will hopefully matter to you. The future of our health and our parents' health is often unpredictable. Of course, family history might indicate what we'll be facing as we reach our 70s and 80s, but there really is no way to know for sure. It's likely, though, that long-term care in a private nursing home or assisted living facility, or even at home with a private caregiver, is on the horizon. According to the AARP, 52% of people over the age of 65 will need some type of long-term care services in their lifetime. While the days of nursing homes and assisted living facilities might seem far in the distance, it's important that a plan for long-term care is established years ahead of time. A person in their 50s or 60s who chooses to plan ahead for their long-term care might consider long-term care insurance. An older person in their 70s or 80s can also look into long-term care insurance, but the hard truth is, the older you are, the more costly the premium. If you're in immediate need of long-term care, it may be too late to be covered. That's why it's so important that you consider your long-term care plan ahead of time. Long-term care insurance offers services that aren't covered by medical insurance or even Medicaid. Services such as bathing, dressing, and getting in and out of bed are all covered by long-term care insurance. And if you have a chronic medical condition or disorder, such as dementia or Alzheimer's, long-term care insurance will reimburse you for the assistance you receive at your home, nursing home, or assisted living facility, and even in an adult daycare center. There are many reasons to consider buying long-term care insurance. According to a 2016 study by the Urban Institute and the U.S. Department of Health and Human Services, 14% of people in need of long-term care will require that care for 5 years or more. Long-term care can drain a retirement nest egg very fast. AARP states that the national median daily cost for a private bed in a nursing home in 2019 was $280 a day, or $102,000 a year. And a year-long stay in your own room at an assisted living facility runs $48,612. Fidelity Investments reports that the average 401k balance was $105,000 in September of 2019. In short, most people will need long-term care insurance in order to pay for their care. You want the best possible care for yourself and your parents, and the more money you have to spend, the better care you're bound to receive. Medicaid covers the cost of nursing homes that accept government funding, but you'll only qualify if you're below the poverty line. And Medicaid does not pay for nursing home costs in every state. Of course, if you wait long enough, long-term care insurance can get expensive, which is why it's important to consider the most cost-efficient time to buy a policy. While it's smart not to wait until your 70s to buy long-term care insurance, you also don't want to make the purchase too early. A person who chooses to buy a policy in their 40s could be paying premiums for decades before filing a claim, which can be quite the financial burden. At the same time, if you wait until you're 70 to buy long-term care insurance, you'll be hit with an annual premium of $6,196, or a monthly premium of $516. According to a 2019 Genworth study, Diane Lassus, the co-founder of wealth management firm Lassus Worley, explains that if your health is okay and you don't have hereditary problems that insurance companies don't like, the ideal time to get long-term care insurance would be your early 60s. According to a Genworth study, a single 60-year-old man will pay only $35 a month more on his premium than a single 50-year-old man, and will save $11,540 in premiums through the age of 79. However, if this man waits until he is 65, he will spend $239 on his monthly premium. The costs are also different for men, women, and couples. Women pay more because they are more likely to live longer and more likely to make long-term care insurance claims. While a single 55-year-old man averages around $2,050 a year for a long-term care policy, a woman of the same age and health can expect to pay $2,700 a year. For couples, premiums are lower, and a person could take from their spouse's pool if they require more care than their policy affords them. While it's certainly pricey to buy long-term care insurance, there are financial benefits that might outweigh the burden of the costs. First of all, out-of-pocket long-term care can cost hundreds of thousands of dollars and is recommended for those who would be pulling less than 4% out of their income to pay for long-term care insurance. If you'll be pulling between 4% and 5% of your income, it would be cost efficient to invest in long-term care insurance. Secondly, there are tax advantages to purchasing a long-term care policy. If you itemize deductions, the federal and some state tax codes will allow you to count part of all of your long-term care insurance premiums as medical expenses. Medical expenses are tax deductible if they meet certain qualifications. For someone in their 60s, the maximum deductible premium is $4,220, according to a 2018 IRS revenue procedure. If you don't know whether or not you'd qualify for these deductions, reach out to your insurance provider to find out. It's important to consider also that these prices could rise after you purchase a policy. Unfortunately, you won't be locked into a set rate for your premium. In the last few years, insurance companies were able to justify rate increases because they underestimated the amount of care they'd be accountable for. And this has also led to a dramatic decrease of insurance companies that offer long-term care policies in the first place. In the 1990s, there were more than 100 insurers who sold long-term care policies, and today, about a dozen do. According to Barbara Marquand, an expert and writer about long-term care insurance, the uncertain costs of paying future claims as well as low interest rates since the 2008 recession led to this mass exodus from the market. Low interest rates hurt because insurers invest the premiums their customers pay and rely on the returns to make money. Today, you'll be able to purchase a long-term care plan from Bankers Life and Casualty, Genworth Financial, Mass Mutual, Mutual of Omaha, New York Life, Northwestern Mutual, and Transamerica. You'll want to do careful research to determine which of these companies is best for you. Even if your work offers a policy through a certain company, it's best to get quotes from every company you can. This is because prices vary widely among insurers. The American Association for Long-Term Care also advises working with an experienced insurance agent who is eligible to sell policies from at least 3 different carriers. The best way to buy a plan, once you have decided who you'd like to go through, is to contact the insurer directly by phone or online and fill out an application about your health and your family's health history. Sometimes you'll have to turn in medical records or be interviewed by phone or face-to-face. Policies tend to limit the amount they pay per day and the amount they pay per lifetime. Most policies only cover care for 2 to 5 years. You can make a claim when you are no longer able to do 2 of the 6 ADLs or activities of daily living, and that is bathing, caring, incontinence, dressing, eating, and getting on or off a toilet, and getting in or out of a bed or chair. You will also be eligible if you are diagnosed with dementia or another cognitive impairment. Most policies will require you to pay out of pocket for an elimination period, usually around 30 to 90 days before they will begin covering the care for you. But there are also partnership plans available in most states. According to Barbara Marquand, a partnership plan works like this. The insurers agree to offer policies that meet certain quality standards, such as providing cost of living adjustments for benefits to protect against inflation. In return for buying a partnership policy, you can protect more of your assets if you use up all the long-term care benefits and then want to help through Medicaid. Normally, in most states, for instance, a single person would have to spend down assets to $2,000 to be eligible for Medicaid. If you have a partnership long-term care plan, you can qualify for Medicaid sooner. In most states, you can keep a dollar that you would normally had to spend to qualify for Medicaid for every dollar your long-term care insurance paid out. If you're still not sure whether investing in long-term care insurance is right for you, there are alternatives that you can consider. There are many reasons a person might choose to forego long-term care insurance. Usually it comes down to the cost. One reason to consider an alternative is if you are past the age in which long-term care insurance is affordable. Joe Davis, a financial planner and president of Living Capital Group, explains that most people, when they are young enough and healthy enough to be able to afford long-term care insurance, it's not in their plans. When you are young with a minimal number of medical incidents, it is easier and cheaper. And by the time you feel like you need it, generally you have a health history that will prevent you from getting it. Others might end up leaving their long-term care policies if the cost spikes prevent them from being able to afford it. Luckily, says Jessica Landis, the head of investment solutions at Janney Montgomery Scott, the long-term care marketplace has evolved, and there are new types of long-term care options available that are more attractive than policies of the past. Some of these alternatives include asset-based policies and life insurance policies with a long-term care rider. Asset-based policies have been growing in popularity over the last few years. Simply put, they are a blend of life insurance and long-term care insurance. According to founder of Retirement Income Strategies, Christian Fenrock, if you end up where you need long-term care, you can use the benefit to pay for a nursing home tax-free. If you don't need a nursing home, money in asset-based care will pay a tax-free benefit to your beneficiary. In other words, any money you don't end up needing for long-term care will go straight to your family. Asset-based policies are expensive, but they are locked in at one monthly rate, so you'll never need to worry about a spike in prices. And if you're worried about draining your savings and having nothing to leave your kids or family, this is a plan that will actually put that money into their pockets when the time comes. Further, these plans will usually return all of or a portion of the money back to you if you end up changing your mind. Another option is purchasing a life insurance policy with a long-term care rider. This allows you to use a life insurance's death benefit to pay for long-term care should you require it. According to Jessica Landis, if you don't use the long-term care benefit, your heirs or your favorite charity can receive a life insurance death benefit as a result of the premiums you paid instead of the use it or lose it scenario that traditional long-term care insurance offers. Still, long-term care insurance is probably the best option for most people in their 50s or 60s who are planning ahead for their futures. After all, it is used by more than 8 million Americans according to the American Association for Long-Term Care Insurance. That's because it's an option that will allow you to feel financially secure when it comes to facing an unpredictable future. Medicaid doesn't cover home health or facility-based long-term care, and even if you do qualify for paid nursing home care, it only pays for up to 100 days. Out-of-pocket costs average in the hundreds of thousands of dollars and will most likely drain nest egg funds completely dry. Long-term care insurance policies may be expensive, but they are certainly a cost-efficient alternative to paying for care out of pocket. Regardless of what plan you choose for your long-term care, it's essential that you begin making a plan today. The hard truth is that there's no perfect solution to receiving long-term care. It's bound to be expensive and burdensome. So lighten the load by planning early and saving up. The last thing anyone wants for themselves or their parents is to wait until it's too late to come up with a long-term care financial plan. Remember, 52% of 65-year-olds today are likely to need long-term care services in their lifetimes, according to AARP. Start planning today so you can feel secure about the future. We want to thank you for joining us here today at All Home Care Matters. All Home Care Matters is here for you and to help families as they navigate long-term care issues. We invite you to please join us at allhomecarematters.com, where there is a private, secure, fillable form where you can give us feedback, show ideas, or if you have questions. Every form is read and responded to. And please, if you know someone who could benefit from this episode, we ask you to please share it with them. And join us next time on All Home Care Matters, where we are going to ask the question, are you sad? And by sad, we're not referring to emotionally. We're talking about seasonal affective disorder. You do not want to miss this episode. Thank you so much.
Thank you for joining us today. We look forward to you joining us again on another episode of Home Care Matters. To learn more about the show and to connect with us, visit us at allhomecarematters.com.